back. You're watching Budget Trade. We have with us Ashish Chaturmohta, ED Portfolio Management Services at JM Financial, joining in. Hi Ashish, thanks for taking the time out to talk to us. Ashish, to begin with, and there's so much of euphoria in the markets. We made a new record high yesterday. Of course, today we've taken a little bit of a break. What could, in your opinion, happen to the markets following the budget? Will it continue to make all-time highs, or do you anticipate a drastic correction or a strong bout of profit-taking?
Good morning, Samina. So as far as broader markets are concerned, yes, we are hitting fresh all-time highs, but we need to check few of the data points in sense that if you look at, the total profit made in 2019 of Nifty 50 companies and 2024 profits, ideally these profits have grown at a CAGR of 18%, and that's the CAGR we have seen in terms of market capitalization growth. Also, if you look at from a forward PE multiple basis, Nifty is trading around 20 forward PE multiple, which is at a slight premium to its 5-year average. At the same time, if you look at high frequency indicators, whether it's electricity bills or whether it's e-way bill generation, all these are in a very, very strong uptrend, and we are seeing a very strong GDP expansion. So almost 8% GDP growth we have witnessed, and in days to come, we believe that 7 to 8% is the GDP growth we are expecting. So keeping all this data in points, it looks like if any correction comes, it's going to be a buy on dip kind of opportunity. And from a technical perspective, we believe that we are in a very, very strong trend. And a lot of these sectors, whether it's IT, banking, financials, they have not contributed significantly in the last 1 year bull run to the broader market. So looking into this, we believe that if this sector starts to contribute to this rally, then there's a further leg to the rally. So I think any dip of 4 to 5% would be a very good opportunity to add onto the markets. So we don't expect any significant correction in the broader market. And if any correction comes in the range of 5 to 6%, that would be an ideal opportunity to add further positions into the market.
Right. Ashish, but at the current juncture that we are at, are you open to putting fresh money to work within budget trades? So railways, defense, fertilizers, these are stocks and sectors that have been rallying up on anticipation of a budget that could be favorable to the sector. But what I want to understand is, should somebody take a fresh bet just ahead of the budget? Is that a good tactical trade?
So, Samina, I'll give a disclosure that, in terms of our PMS in the last 15 months time frame, we have been building a lot of positions in defense and railway, and in fact power also. So these were the three sectors where we were significant overweight, and actually a lot of these stocks in our portfolios have gone up significantly in the last couple of months, whether it's into defense or railways. So as far as fresh allocation is concerned, yes, the risk reward looks little stretched at this point of time. But in terms of opportunity size, we believe there's a phenomenal opportunity which is being seen in this space. But definitely from a valuation perspective, we are not very comfortable. But yes, in our portfolio, we are holding these names and continue to hold these names because our entry price and the current levels are giving us that comfort. But if the fresh allocation comes, then I think one need to be little tactical or kind of create a position in a staggered manner rather than at one go. Now, in terms of opportunity size, first thing which I would like to point out is if you look at financial year 13, the railway capex was close to 49,000 crore. But in financial year 23, this capex number was close to 2,45,000 crore. And in financial year 28, we expect this railway capex to reach almost 3,80,000 crore, which means from current to financial year 28, we are expecting a 10% CAGR in terms of railway capex. And if this happens, then there is going to be a lot of opportunity which we are going to witness in the wagon segment, in the Vande Bharat segment, in the metro coaches segment. And that's the reason companies like Titagar Wagon, as a disclosure, we have been holding Titagar Wagon since 320, 330 in our levels in our portfolio. And this stock has, we started tracking the stock when the stock was doing a monthly wagon production of almost 75. And currently, this company has crossed a monthly capacity of almost 1,080 wagons a month production. And now they are looking for passenger coaches also. So that's a new optionality which is coming into the business. So keeping this in mind, I think it's a good opportunity, but stock is at an elevated level. So we suggest that any good dip of 7 to 10% correction in these stocks would be a good entry point for stocks like Titagar Wagon or Jupiter Wagon. or for that matter, a company like BML, which is into metro coaches, which is into Vande Bharat opportunity, and also opportunity of defense and mining construction is also there in BML. So these are the names which I think on any dips, this opportunity is really large, and these companies will be a big beneficiary of this opportunity. But as a disclosure, we continue to hold Titagar Wagon and BML in our portfolios.
Right. With that disclaimer, Ashish, the risk reward may not be so favorable if you've got to make fresh allocations to some of these railway stocks. But if one wants to, make use of the current opportunity, and if you do get that correction of 5 to 10%, beyond the three names you mentioned, would you add any more railway stocks in terms of preferences? How about a RVNL, because that seems to be winning orders pretty much every single day? A RailTel and IRCTC, do those also look good to you from now until the budget? It's a tactical call, fundamentals and technicals in mind.
Yes, so I think RailTel is a very good opportunity according to me, and I think we, as a disclosure, we have this stock in our portfolio as well, because we believe that in terms of RailTel, Kavach is a very big opportunity. We have so far deployed almost 1465 route kilometer Kavach as an opportunity, and this is a very large opportunity which we believe is going to come. So obviously, in the public sector space, RailTel is going to be a big beneficiary of this entire Kavach opportunity. Apart from that, some of the private players like HBL Power is also a very big beneficiary of this Kavach opportunity. So as a disclosure, we continue to hold RailTel and we continue to like it from a technical perspective, even at current levels. My sense is stock is forming a very, very strong base after consolidating for last 6 months. So there is a strong, support at 10% lower level from in RailTel. And looking into the long-term chart, it looks like stock is headed towards 700, 750 kind of trajectory. So our preferred pick in this entire space would be RailTel. With a disclosure, we continue to hold the stock in our PMS also. As I mentioned, in the wagon space, it's Titagar and Jupiter Wagon, which looks very promising. BML is one stock which we like from this perspective. Also, if you look at from an electrification perspective, or companies like Siemens as an MNC company is also going to be a big beneficiary of the railway capex which we are going to witness. Stock has already seen a very strong rally, but my sense is stock is forming again a very strong base around 7,400 kind of trajectory. So I think Siemens is also one stock which looks very good in the large cap MNC space for playing this entire railway opportunity.
Ashish, I'm going to be a little more greedy and just move the conversation beyond rail stocks. Any more stock ideas, strategies that one could consider for the upcoming union budget where you still feel that there is a favorable risk reward?
Yes, so I think Samina, power is one space which looks very promising. We have been very constructive on the defense space, but the stocks have seen a massive rally. We continue to like this defense opportunity because of the strong order book, because of a strong, I would say, the revenue visibility which we witnessed, because of the indigenization factor. We have seen for a company like Bharat Dynamics, which used to do a 65% indigenization at one point of time, is now doing an indigenization close to 91%. So the operating margins have jumped up. Same is the case for a company like Solar Industries, which is into explosives. The current, top line almost 15% comes from defense, and it is going to go up. So these are the opportunities which looks promising. And as a disclosure, we continue to hold these names. But from a current risk reward perspective, I think power is one space which is offering a very strong risk reward. Within that, I think as we say that the current capacity from 176 gigawatt is going to become 500 gigawatt, which implies a 17% capacity CAGR growth in the renewable energy segment. So obviously different companies, whether it's NTPC in the power generation, which is going to create almost 30 gigawatt of renewable energy capacity. In terms of grid, I think grid connectivity, power grid would be a big beneficiary of this trend. In terms of high voltage, HDVC player, Hitachi Energy or Power India, which we call today, is a company which is going to be a big beneficiary of this entire grid connectivity space. And then some of the wires and cables player like Apar Industries. These are the names which we believe are going to be big beneficiary of the capex which we are going to witness in the power space, and these companies still offer reasonable risk reward. As a disclosure, we continue to hold these names in our portfolios.
It's amazing. We're always, have people and viewers writing and asking for mid-cap ideas, and some of the names that you mentioned will, of course, make good investment opportunity. Thank you, Ashish. It was always good talking to you. Have a good day, and we'll speak to you soon.
Thanks, Samina.
With that, we're completely out of time on Budget Trades. Thanks for watching.